Hi, I'm Rob Massa. I'm the Managing Director of Qualified Plan Advisors in Houston, Texas. I'm also known as the Retirement Pro, the 401k Guru, or even the Foracle. I want to welcome you once again to my blog. Into this edition, I'd like to talk to you about the often forgotten Savers Tax Credit. See, back in 2001, at the beginning of the Bush administration, Congress and the President released a tax reform bill or law known as Economic Growth and Tax Relief Reconciliation Act of 2001, or EGTRA. It doesn't roll off the tongue. Inside that law is a new concept, though. See, contributions made to 401k and 403b plans were already deductible for those who participated. But under EGTRA, lower income workers would get an additional tax incentive to participate in the form of a tax credit. Unlike tax deductions, tax credits function as a dollar for dollar offset to the amount of money you actually owe in taxes, and they're probably the most valuable benefit anyone can get in the way of tax benefits. At that time, Congress and the president recognized that retirement plan participation among lower income workers was well below what was necessary to ensure these workers could achieve a successful retirement. So the idea was to add an additional tax benefit for these employees to make saving for retirement more affordable. So how does it work?
So how does the Savers tax credit work? You see, the credit reduces taxes owed for lower income individuals based on how much they contributed to a 401k or 403b plan for the year. There's two things you need to know in order to determine what your tax credit's going to be. First, you have to know your filing status. Are you single or are you married and filing separately? Are you filing as a head of household or are you married and filing jointly? Each of those has a slightly different impact. The next thing you want to know is what is your adjusted gross income? Adjusted gross income is determined on your 1040, and basically it's your gross income, including things like wages, interest, dividends, capital gains, etc., and then minus adjustments such as alimony, educator expenses, student loan interest, etc. When you determine your adjusted gross income, you can figure out what your tax credit's going to be. The table looks like this, and this is it for 2020 filers. So let's say you're married and you're filing jointly, and you have an income together of, say, $40,000. That's going to put you in the 20% tax credit row, which means that if you put in, say, $1,000 into the plan, you're going to get a tax credit of about $200. Here's a more realistic or visual version of the table. In this example, Jane is a single taxpayer. She has 2020 gross income of, say, about $30,000, but she then contributes $1,000 to the 401k. This makes her W-2 and AGI income $29,000. And please understand, for simplicity here, I don't include any other income or adjustments. Now, per the IRS tax tables, her taxes are going to end up to be about $3,281. I want to make note that without the 401k contribution that she already made, that $1,000 contribution, which reduced her income, her taxes would actually be $3,401. She already got a tax benefit. Then, because her income is in the right band, she gets an additional tax credit. Jane's AGI is between $21,251 and $32,500. So she gets an additional 10% contribution credit of $100 or $1,000 on her contributions times 10% or $100. And what this means is her net tax bill is going to be $3,281 minus another $100 or $3,181. The net cost of savings for her of putting $1,000 into the 401k ends up to be about $15 per week or about $2 per day, thanks to these two deductions that she got.
Now, here is a very important thing to keep in mind. You see, even as we speak, here in February 2021, Congress is considering enhancing this benefit. If you're not eligible for this tax credit, or you're eligible, but the tax credit just seems too low to incentivize you to save, I encourage you to contact your congressional representative and let them know that this tax credit is important to you and that you'd like to see it expanded significantly so that the average American worker can actually benefit from it. I'd like to thank you for visiting my blog again. I hope you found this latest installment useful. If it's your first visit, check out some of my other content on my YouTube channel, like it and share it too. If you need more information on any retirement plan related matter, contact me on LinkedIn by clicking on the QR code right here, or email me at rmassa@qualifiedplanadvisors.com. And as always, I'm wishing all of you a very successful retirement.